Okay, good morning everybody. Wrapping up this week, Friday, September 20th, the overnight trade. And what we've been seeing is somewhat of a stagnant trade, pretty much unchanged in the wheats, down around 1 cent in the corn, down 2 in the beans, unchanged in the soybean meal, and down 25 points for the soybean oil in the overnight session now. But for the week, it's been grains gaining on the beans, meal losing to soybean oil, and crushing margins coming down a little bit. For the week so far, we got the soft red winter wheat up 6 cents, the hard red up 11, and the spring wheat up 20. Corn's up 4 cents, whereas the beans are down 7. And then in the products, we got the meal down around $5 with the soybean oil up around 30 points. And the crush here this morning having a little bit of movement, down anywhere from 1 to 3 cents for the week. Towards the end of yesterday's session, was being reported that a trade advisor to Trump said that the president was ready to escalate the trade war with China if a trade deal is not agreed upon real soon. That the ongoing low level of tariffs could go to 50% or up to 100%. So once again, the ebbs and flows of positive and negative news continues, and they're continuing to meet, so we continue to monitor that. We also have another political front going on as Trump met yesterday with big oil and big corn representatives and trying to work out a biofuel policy between the two with no known results at this point in time. Yesterday we had our weekly export sales that came on out. All wheat sales are running 21% ahead of a year ago. Shipments 29% ahead, with the USA forecasting a 4% increase, so a little bit of a bright light there, but not so much in the corn and in the beans. Corn sales 48% behind, with the USDA forecasting unchanged, and the beans are running 37% behind, with the USA looking for a 2% increase. Wire Story reported Brazil's primary corn and soybean growing regions are historically dry as planting for the 2019-20 cycle begins. Rain should come soon, though the weather forecasters disagree on the intensity, but either way, analysts are looking both for upcoming harvests hitting new records early in the year, so something that's going to be important going forward, along with Argentina being unusually dry. And they got another glitch going on in there as well. Adding uncertainty is next month's presidential election that could see business-friendly incumbent Macri lose power. So what that would mean is that they would go and put taxes back on farmers' exports. Farmers may not want to grow. We know that we've been losing a lot of business to Argentina, beans, corn in particular, so that could be a big changer, a fundamental change, keeping an eye out for that as well. Meanwhile, Russia, the Ukraine, and the EU report they continue to have grain to export. The U.S. weather forecast remains favorable for the 6 to 10 and the 11 to 16 day forecast. There's a cattle on feed report coming on out after the close here today, 99.4, placements 94.5, and marketing's 98.4. The commitment of Treasury report's also coming out after the close, and what we're looking there for, as estimated, is still the trade modest to fair net shorts across the floor, and that'll be out at 2:30. So lately we seem to be just sitting here with no definitive extended price direction. The ongoing lead topics that would appear to change it would be the advancement of the harvest yield, and as far as the results go, basically what I'm hearing right now, can't go through it, don't have the time, but maybe more or less than better and or versus last year. The approach and the rhetoric of the U.S.-Chinese trade talks is number 2, and then number 3, the early progression of the South American growing season. So once again, these are my opinions, not that of ADM or ADMIS. Have a good weekend, and I thank you.